AI is driving down the cost of literally everything. There is nothing safe from AI. Your wage, your salary, your income that you rely on today could be replaced or at least subsidized by AI. And so if this is true, Bitcoin is the only way we can reliably save ourselves from a UBI hell, where you're dependent 100% on the state to provide for your housing, your food, and all of the rest of it. And so today I talk with Forrest Hodl about Bitcoin retirement, about AI, about technology advancements, strategy, all of those fun topics. Enjoy. If you look at the gold community, if you look even at the Bitcoin community or at the money community in general, there's a lot of people that promote fear, that promote like the world is going to end, the money printing, the debt will all kill us. And the crazy thing is, I agree with most of them. I agree that it is really bad, our monetary system. But I think because we have an alternative system, because we have something that is hopeful, we should focus on that. So we, as Bitcoin educators, we could spend 90% of our time saying, see at Fiat and see how bad it is and how it will bring everything down, how it's killing our babies and all of those things. Or you can kind of paint the picture of like a positive Bitcoin future, like what we can also do with that and what Bitcoin plus AI and all those innovations kind of come together and will enable the individual to do, like having more freedom, having more choice of what you do. Like there's so many things that come from that is super positive.
Yeah, and it's a hard sort of duality that we live in because they're right, as you said, you agree with a lot of them. I do too. Like the world is bad. The fiat system is systemically broken intentionally to benefit others and basically to enslave the people that are that don't have any capital and any control and any closeness to the money printer. So it's terrible. It's terrible. And you can definitely go down that route and you can live in that world of fear and all of that. But, your reality is a huge part of your reality as an individual is based on your perspective. So if you can shift that somehow, right? And it's not something you can just like snap your fingers and do. It's like you actually have to really start to believe differently than maybe you do right now if you live in fear. But as you learn about something, oh, this is an alternate monetary network. This is accessible by anybody. You don't need a bank account. You don't have to be born in a certain region or speak a certain language. You can buy it's essentially infinitely divisible, so you can buy a very small unit of it. Bitcoin is divisible to 100 millionth decimal point. But I think, I say infinitely divisible because I think it's a relatively easy consensus change at some point if it becomes necessary to divide it further. But it's still max supply, fixed issuance. These are also aspects that make it fair, make it honest, and make it good for humans, for humanity, right? This is an instrument of abundance and prosperity for the individual. And when you recognize and realize that, how can you be fearful around it? Like the fear around the fear mongering within Bitcoin is like, oh, they're going to ban it. They're going to stop you. It's not private enough. Like there's all these little things. And I'm not saying none of those are issues. They're all issues in the moment or as they come up. But nonetheless, Bitcoin is more powerful than each one of these individual problems. And really it's stood the test of time, even with its relatively young age. It is super anti-fragile and resilient, and it's hard not to be hopeful when you have the understanding of Bitcoin, and then that changes your perspective and changes the way you live and the way you interpret life, and just has this massive domino effect that I think is underrated. Makes you a better person, makes you more capable in the world, which is massive, I think.
Yeah, I'll talk a lot about the empowerment you have from Bitcoin, and so this alone, just like having the ability to save. We're not even talking about the the second and the third order effects of that on society and what comes with that. Just for you as a human being to be able to save in something and trust it will still be there in 1 year, 5 years, and 10 years, that changes everything, like on an individual basis.
Yeah, it does. And I think it's really underrated because if you say that to somebody, a friend that's not into Bitcoin or just anybody on the street or family or something, oh, I use Bitcoin as savings. I have the ability to save my purchasing power. They think, okay, so what? I have a bank account. Maybe I'll put it in a savings account. It'll pay me 2% interest. They tell me inflation's 2%. I'm saving my money. And it's just not true. Like you're not keeping up with inflation. And if you are, it's because you're taking outsized risks by investing in something. So it forces, the way the system works is it forces broad money into investment to continually basically push up the asset prices, so people can retire off of the assets that they bought at a younger age from new investment in. And if you describe that in other terms, that's a Ponzi scheme, right? So a lot of what what we're experiencing here is a system to perpetuate a Ponzi scheme, and it's like a debt spiral as well with the money creation. So it's unsustainable and it's unstable, and all of that should give people a lot more worry. Again, if you have your money in a bank account and you're getting what you believe inflation is, and maybe even inflation is that, it's still not your money. It still doesn't, you still need permission to have it. So there's all these, again, as you said, second and third order effects beyond that, where you don't have any freedom, you don't have any control when you're within that system. And I think that's an incredibly underrated thing. And I think there's actually a huge amount of value in just being able to actually control the assets that you own. And people were saying, people are like, oh, I don't care. Like, I'll trust the big banks. They've never done me wrong before. But it's a real vibe shift. It's a real change in your mentality when you actually have something outside of the current system. And I think people should try it. And I think that's why, like, a lot of people advise people, like, buy some Bitcoin on exchange, move it into a software wallet, send it to another one, send it to your friend, just send a transaction, go view it on the mempool, see it happen, get added to a block, actually see a transaction happen on the Bitcoin network, and it will actually just begin the journey of understanding how monumental it is that this system exists, that nobody controls, that everyone can be a part of, that I'm running a node right over there that is, that I can validate all of that on. I'm not trusting anybody with that. And it all works. It all works seamlessly. And it's worked for 16, 17 years now, where it's just flawless. It's a real revolution happening here in front of people's eyes. And they're saying, oh, so what? I can get those returns if I buy Nvidia. I can get those returns if I buy S&P 500. Maybe 1 year, but another year you won't, because Bitcoin is just beyond the innovation that's happening there. In my opinion, I mean, this is all sort of the thesis of, like, or my thesis of why it's going to appreciate in dollar terms, is that in a world where, without a doubt, humans have developed more technology to drive, to create deflation, essentially. We have gotten better at creating housing. We have gotten better at creating TVs, food, right? It used to take a whole family to farm a field to produce food for themselves and a neighbor and maybe a couple other people in the community, right? And it was this sort of substance farming and a little bit beyond that. Now there's one farmer who, uses a bunch of fertilizer that was created by a technology, and then, has a tractor and produces a huge amount of food on a field that feeds thousands of people, right? That is labor getting removed. That is abundance being created. That's a deflationary technology. And as things become more abundant, they become worth less. And Bitcoin is the only thing that stands opposed to that, especially in the digital world, which is, again, if you look at trends, right, this is all sort of like theorizing into the future of trends. We're getting more and more digital, right? More of our lives are digital, and the digital world is becoming more and more abundant, and AI plays into that as well, right? Like we can all make bespoke software with vibe coded AI. We can use AI to be our assistant, to be our researcher, and essentially, like, where you might have paid for legal advice or medical advice or any sort of types of advice, you don't anymore. So it's like this demand that never happened because of the abundance of a technology, and it's this value that never gets transferred or gets less transferred to somewhere that was investable previously. So with that, Bitcoin, again, is the only thing that can't be made more abundant. The AI could become, as you know, we could go super AGI, artificial general intelligence, and still they would have no way of creating more Bitcoin, because we would disagree with the way that they've created more Bitcoin by running a strict set of rules on our nodes, and that enforces that scarcity. So as things become more abundant, scarce desirable things become more desirable and more valuable, right? It's the only other metric that can move. If supply can't catch up to meet demand, then price has to move upwards until more supply gets drawn out by selling at those higher prices. So that's the whole thesis, is that all growth needs scarce, desirable, uncensorable, decentralized, non-controlled money as a value mechanism for value transfer in the future. That's my whole thesis, and I just think it's going to take many, many years to play out, because you could dissect each one of those little things and have to begin to understand those knock-on effects, those trajectories, when other people are going to understand that, how it plays out. You can map that if you wanted, of what price projection we'll have, but to me, it just doesn't matter, right? It just, you got to have a long time horizon, because these are not simple things. There's a whole complex that is trying to make this not happen, and they're not being super overt about it. They're not super cracking down on Bitcoin, because that's not the way they can slow it down. If they do that, it actually shows that there's it basically will bring out a lot more attention to it. So instead, they say things, well, a couple of years ago, they would say things like energy usage of Bitcoin mining is bad. And, now they have some guy who's popular about his takes on Iran saying, where are the servers? And, he's never done a Google search in his life or something. I don't know. But this is kind of the way that, in my opinion, the fiat complex continues to perpetuate their shitcoin, right? Like, I actually think, like, all bankers are essentially influencers, and they're trying to influence you in ascribing value to their currency. And I think you're being fooled if you believe them. And it's just like any other crypto thing, right? Like, crypto is just fiat reinvented, right? It's just, hey, buy my crypto because it can do X, Y, and Z. Ignore the fact that I own 30% of the supply, and I can change the rules, or a small group of us can change the rules. That's the same thing as fiat. It makes no difference. And Bitcoin stands alone from that. I mean, my YouTube channel used to be called Bitcoin Not Crypto, and it was because of that distinction that I think is really important to make. And I think that's another way we get psyoped away from Bitcoin, right? Is everybody in the mainstream media, they could be saying Bitcoin, they'll be talking about crypto. They could be talking about crypto. They're also talking about Bitcoin. These two things are completely irrelated. They're not related at all to me. And that distinction is intentionally muddied. It's either intentional or ignorant, but either way, it does the job of pushing people away from this. And I think that's actually a massive disservice for the benefit of humanity. I think this thing could make the world a better place. That's why I'm in it. And that kind of goes back to, like, that sort of like hope and nihilistic conversation we were having earlier, which is just like, Bitcoin could go to zero in the future, and I still will have been glad that I spent time thinking about being involved and working within Bitcoin because it made my perception of reality better and more hopeful, and therefore I lived a better life because of it. So yeah, I don't want to be in, like, I could have bought in Palantir stock, right? It would have outperformed in these in certain periods. I don't think it's ethical to do so. I wouldn't feel good about where my money's invested in. So that's another reason that Bitcoin interests me.
There was a lot in there. I have a couple of points to that. I want to start with the most entertaining one, which is the video that you mentioned of the guy with the CIA operation, because I saw that, and I know I usually don't try to multiply stupidity. And if you share stupidity, you kind of multiply the stupidity. So I usually don't do that. But I found it so entertaining what he said there. And the bad thing is that people actually take it as an like actual argument. There will be people watching this clip that I'll show you guys in a moment and say, oh yeah, I actually don't know where the servers of Bitcoin are. So like I don't trust Bitcoin now. Mm-hmm. And they don't even go down the rabbit hole of researching, because maybe they trust the host, maybe they trust the guy because they like him of something else, and they take his word for that and stop right there. And I don't know if he is on purpose stupid, or if he just likes to talk shit about things, or it's an engagement farming tactic. Like, I don't know what his true intentions are. It's the only clip I've saw from him, so I have no clue what this guy even is. But I saw him, I think, a couple of weeks or months ago, also on Twitter, where he claims he never claimed to be a professor, and then another clip showing him saying professor like 50 times in different interviews. But that's a whole nother story. I want to show you guys this quickly, because as a Bitcoiner, I feel like it's entertaining. I don't know if you if it's also entertaining for you guys.
There's no volume on it. I can't hear it.
Oh, you cannot hear it?
No.
Oh shit. I'll try again. Wait.
I guess it could be on my end, but I'm not sure.
So the moment people recognize that this is a CIA operation, people won't put their money into blockchain. People won't put their money into Bitcoin. They'll be like, I mean, why would I do that? You have to ask yourself this question: where are the blockchain servers located? Right? Because I imagine if you're able to control the hardware, you can also control the software. I don't care what they tell me about open source and all that. I want to know where the databases are, where the servers are physically.
I don't know. I haven't seen the full clip, but I love that the host laughing at that point. I don't know if he agrees with him or if it's just a laugh because he's it's really a stupid thing. I want to dissect it for like two different points. The first one is it's a valid question. Like, I think every Bitcoiner that gets educated on Bitcoin should ask this question, like, where is my servers? And that's that question you should be asking, and you should find an answer, and the answer should make you more bullish on Bitcoin than you were before you knew the answer to that question. But the thing that, like, the second point, the thing that really kind of tricked me here, like, first of all, he just like puts blockchain in a thing, but the thing was, for me, the software and the hardware. It's open source, and so if you ask yourself the question, like, where is the hardware running, like you can run it, like everyone, like you can just like go ahead and like you can run it. It's open source. So the moment he mentioned open source, he should have realized everyone can run it. Like, it's not a closed system. It's not Google. I cannot run Google on my on my computer. I can copy it somehow and run it and try to do something but it's a closed system. I don't know the code and algorithm of Google, but I can run Bitcoin myself. What are you thinking on that clip?
Yeah, I mean, I completely agree with you, and I think the main thing there is like, you know, I make fun of this guy, and I did earlier in the show, but you're absolutely correct that that is a question that you should ask: is where is the blockchain of Bitcoin stored? Where are the servers? What are the servers? What are the miners? There's no question that should be off limits when you're researching anything, and I don't know why this guy is continuing to ask these questions, because this video here has gone viral. But a week ago on Maple Bitcoin, we reacted to a video of Prof. Zhang saying the exact same thing. It was from a interview from like months and months ago. So within those months, he's been on BTC sessions with Simon Dixon. He's, you know, all over the place, becoming popular. He's never actually looked into the question that he's beginning to ask. So to me, that is more intentional than ignorant. It's got to be. Like, there's no way, because you say something like that. If I say something wrong on this podcast and I look at the comment section, I'm going to get corrected, right? So without a doubt, people have been messaging him, hey, this is where the servers are. They're in my house. They're in my basement. My buddy down the road is running a Bitcoin node too, right? Open source means that anybody can run it, as you said, on basically any type of hardware, or vast majority of hardware. And yeah, I mean, that's what open source means. And the first thing that he said there is that, like, the CIA could have created this thing, so nobody's going to put their money into it. The mystery, like the creation of Bitcoin, is a great mystery, and that's very intriguing for normies. Of where did Bitcoin come from? Who is Satoshi Nakamoto? Is it Adam Back? Is it Len Sassaman? Is it this? Is it the CIA? Is it, you know, all this kind of stuff, right? All these questions that really intrigue normies, because it is a fantastic mystery, and it's fun to think of these things. But ultimately, because it was open sourced at some point, because the project was done in the open, it means that it has been audited more than most code out there, to make sure that there is no backdoor, that there is nobody being able to control this thing in some way, like the CIA would want to with a digital currency. They would want to have access to surveil, right? They're an intelligence organization. That would be their intention. There is many other places that they would, that like, essentially what I'm alluding to here is like stable coins, CBDCs. These are the types of instruments, as far as digital currency, that would be much more intriguing to an organization like the CIA. And since it's been open sourced, if there is anything wrong with it, it can be modified. You could download the Bitcoin reference implementation, modify it however you want, as long as it's compliant with the network that still exists. You will join back onto that network with that slight modification. If you change it, the consensus of it, you'll be running an entirely different network, and many people have done that exact thing. But that is part of what open source makes it way more transparent than what he's implying, right? And the hardware is a lot less important than the software in this case, right? Like, they both need to exist for Bitcoin to run. There needs to be people running full nodes and using Bitcoin nodes, but the software is what allows them to do that. And the software exists in repositories, and anyone can download it. Anybody can audit it. Anybody can look at it. And so you begin to see that if you have questions around the validity of it, the safety of it, those can be answered because it is open source. If it was closed source, nobody should trust it. If Bitcoin was a closed source project, I wouldn't be talking about it right now. It's the only reason it exists in the scale that it is, the interest that it has, the future potential that it has, is because it's open source. It's all because it's open source. If it was another closed source project, it would be like Google creating a money that is going to revolutionize the world. I wouldn't believe it. I wouldn't buy it, because it wouldn't be able to fulfill that goal.
If you live in Europe like I do and want to buy Bitcoin the right way, check out Relai. Relai is a Bitcoin-only platform with no distractions, no shitcoins, just a BTC. It's also the easiest way I've found to do what actually works, buying Bitcoin on a consistent basis. Relai is also self-custodial. They never have the keys to your Bitcoin. No freezing of your assets, no counterparty risk, no rug pulling whatsoever. I have been a long-term fan of Relai, not only because it's incredible, easy to use and very beginner friendly, but also because it just works. If you want to get started with Relai today, click the link down in the pinned comment or in the description, and once you have downloaded the app, type in Robin in the referral code section of the app to save 10% on fees. So set up your DCA Bitcoin plan today with the Relai app and get cheaper Bitcoin if you use code Robin. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Finally, we have BTC Prague back in 2026. And this year, I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi. I love that. I want to make a quick detour because I'm curious what your thoughts on open source is, and then coming just briefly back to that, because it's so interesting because the TCP/IP protocol, like the very foundation all the internet is built on, we all know it's open source. Like also the email protocols is basically open source. But then the clients, or how should I say, the applications on top of the internet, like Google, Gmail, Facebook, like StreamYard, what we're using now, where we're streaming to YouTube, like all those things are closed sourced. Mm-hmm. And I'm thinking a lot if this will be ending up also like that on Bitcoin, where Bitcoin, the underlying protocol is open sourced, the underlying network and asset is open sourced, but then we are using more and more like closed sourced things as products on top of that. I mean, like Stretch is one thing that's a whole different level of closed sourced because it's an IOU basically, but most people just like having an exchange, don't do all the things that most YouTubers actually preach in Bitcoin, like self-custody, run your own node and all of that. How do you actually look at open source in the Bitcoin community and this kind of, we use an open source protocol, but then using a closed sourced application to use the open source protocol?
It's a really good question. And I think that's one that people should seriously be asking and thinking about. Like it's not an exact comparison, but you could think of like an exchange that you hold your Bitcoin on as a closed source application of Bitcoin, because you don't really know, like it's an internal ledger. It's not software. So it's not, well, I mean, it is, but it's not a perfect analogy, but you could think of it in that way. And people don't want to hold Bitcoin on an exchange. I mean, many people do, but Bitcoiners that understand the risks of it end up not wanting to do that because there has been dozens and dozens of exchange failures. So there's instability with closed source systems. And I think it's entirely a possibility. So again, back to your sort of analogy of like the protocol of TCP/IP, email was built on top of that. You can host your own email service, but you're going to have a hard time getting your emails delivered to the systems like a Gmail. Like if you send from your own server to a Gmail account, it's going to end up in the spam folder, or they might not even accept it at all because because of the open source nature of it, because it's so easy to set up your own email server, and because it's so inexpensive to send emails from your own server, it was used by people trying to scam people. So it becomes this, it sort of closed down to protect itself and to make sure that there's some sort of semblance of control and continuity to the emails you receive, right? So it is all open source. It is still there, but like the garden has become walled out of necessity to some degree. So you could think about that into Bitcoin, and you could think, okay, well, is there potential where something like that could happen on some sort of layer of Bitcoin where there's some sort of necessity for it to be closed, or some sort of incentive for it to be closed? And you could see that happen, but I think it's part of like, what is the use case, right? So if the use case of this closed source software on top of Bitcoin is so useful that you have to use it, right? We have to use email. It's so useful to use. So we have to use sort of the closed in gardens of Gmail, Proton, whatever, right? It's so useful. But what could be built on top of Bitcoin that is so useful that you are restricted into a closed source application? Not sure of it. I can't think of anything, right? Like Bitcoin, the use case of blockchain technology, of a decentralized financial ledger, is money, right? And so like the things that have been built on top of Bitcoin are all to facilitate some aspect of money. So on chain, the technology of being able to have a seed phrase that's allowed people to be able to store their value better because they now have a way to protect their Bitcoin in a way. The Lightning Network, built on top of Bitcoin, completely open source, and allows the medium of exchange method to happen faster and easier through payment channels and a routing network more privately. It becomes more usable as a medium of exchange. So if Bitcoin is money and that's its use case, we've already sort of established the way to use it as money in those ways. And there'll be things like Arc and Spark and other ways to speak Lightning or to balance channels or to have ownership over the contract of Bitcoin in these channels, or however that ends up working. But if Bitcoin is money, where is the necessity for something to become closed source? Where is the ease or use of something that's closed source? And I think because Bitcoin is so, I think because the people developing in Bitcoin, working on Bitcoin, working on layer twos, they're fanatical, like they're obsessed. And I think that ethos of open source continues to propagate through there because it can only be trusted if it's open source, in my opinion, and I think many others. And so I think that continues to evolve in that way. And I think actually that's why a lot of other companies, these massive companies, these tech companies, are really not that interested in Bitcoin, because the reason to close source something is because then you can profit from it. Open source is really difficult to make money from. You sort of have to rely on grants, donations. There might be some sort of pricing mechanism you can have on open source software to offer some service for that to make it easier. But it's pretty difficult. It's not really an endeavor that you should make as a company seeking profits for your shareholders. So I think, again, if they try to develop something, it's going to be some centralized crypto rail thing. There might be elements of it that are open source or taken from open source projects, but then made closed. How useful those things end up being is kind of a unknown of the future. But to me, the use case of Bitcoin is money, and the open source layers and technology that we've built with Bitcoin continue to work and will continue to develop in an open source manner. But it's not without its risks. That what you're suggesting or what you're theorizing could be possible, but again, it's difficult to imagine it. But I'm sure people probably thought that about the internet too. Like, you know, we're going to have this sort of open source revolution. I mean, I wasn't there, so I don't know, and it'd be interesting to look back in the history of that more. But you know, you could argue that the internet has been co-opted a lot, right? That there is a lot of surveillance, there is a lot of problems with internet usage now, and it really probably did start, or a large part of it was sort of this space of digital freedom. So, I mean, my hope is that doesn't happen with Bitcoin, and I think it's really important to be diligent about that. And that's why I think that question you asked is actually like one of the most important questions to ask. It's really about like, what is the future of Bitcoin, right?
It is. I first time thought about that question when I had my oldest guest on my podcast ever on. He was, at time of the recording, around 75, 76 years old. And I asked him, because he was not only alive during all the internet coming ups and stuff like that, he actually worked as a network engineer in that time from the very start. And so I asked him, like, what kind of similarities or differences do you see between the internet revolution and the Bitcoin revolution? And one of his examples were, in the beginning, all the people that worked in networking and the networks and the internet revolution, we all thought, in his small circle thought, that we all will run some version of our email server ourselves. Mm-hmm. And he made the analogy of running your own node now with Bitcoin. Now we have that, like, we all will run our own nodes, like we should do that, and it's self-custody, not like having your own keys, protecting them yourself, running your own node, protecting that yourself, not broadcasting just to someone else that has the data, and all of those things. And I found it so interesting, and that kind of triggered for me to ask the question, where do we go with Bitcoin? Because we have, how many people do we have that have exposure to Bitcoin in some way, shape, or form? 100 million, 500 million, I don't know. Somewhere in between is probably a correct number. Then how many people of those actually hold their own keys? It's a very small portion of them. And then how many of them hold their own keys and run their own node? Like a very small section of that. And so if we already are in the early phases at like 1% adoption or whatever it is of self-custody and running your own node, whatever the real number is probably under 1% even. How will it be in 20 years and 30 years if the apps and the ecosystem are even more developed in the Bitcoin ecosystem? And people, I want to talk a little bit later also around stretch and strategy, but I said it probably on our BTC Mastermind live streams also at some point. But when I talked to my mom and my sister about stretch, they're like, oh, how can I buy it? When I talked about Bitcoin, they still did it, but I think mostly just because I'm so annoying on it. They're like, you have to have it, like, do it. And so with stretch, they were like really interested, like, and like their own interest came out like, oh, 11%. Like that's really cool. Like, how can that? The only question is always just like, how can I trust it? But that's kind of where I'm getting at. You have an amazing technology. You know, if you buy that, hold your own keys, run your own node, you will massively benefit, just not only from a wealth perspective, but also from a freedom perspective over the next 10 years. But then people don't do it because they're too lazy to set up their own node. They are afraid of the volatility and like 100 other reasons. And this kind of, I don't know where I'm going with this, but it's just like an observation I have and an annoyance for myself, because I see so few people actually taking advantage of what Bitcoin is, and so many just wanting to do what everyone else is doing, which is usually the average, which is usually not that good.
Yeah, and I think this all kind of, well, this all made me think of the way that I look at the world, which is incentive driven. So everything, I think, the way the world is shaped today, everything we all do as individuals is all incentive driven. It's mostly selfish, and a large part of it is financial. So I think that could be, I'm just sort of theorizing this now as we're talking, but like looking back at the internet, there's not as much financial incentive to be running your own email server, to host your own emails. There's sort of a freedom aspect, a sovereignty aspect, and those could be incentives for sure. But then as it becomes more challenging to do so, those incentives could sort of not be as valuable, right? Then there's the incentive to just sort of join what's easy, what works, and what will actually get your email through. Bitcoin is, people have called it like the internet of money, right? And there's no way to have actually bought into the TCP IP protocol and the email protocol. Yes, you could set up your own server. That's as close as you could to buying into it, but there's no financial incentive really to have done that. So I think that's what fundamentally makes it different and makes it possible potentially into the future where there is going to be this constant financial incentive to get as close to real Bitcoin as possible, right? So that that you don't lose your Bitcoin in a hack, by having it in a vulnerable wallet that's online, right? Being able to have it in these secure open source systems protects you ultimately, right? So I think that financial underlying of it, that Bitcoin is money, actually begins to shape the way it develops a lot differently than the internet. And I think that's actually one thing that's so interesting about Bitcoin is we always try to analogize it back to something that we already see in the world, that we understand, that we have some ability to comprehend. It's digital gold. Again, it's the internet of money. It's not. It's a decentralized financial ledger. Each one of those things needs to be understood. And beyond that, right, what does that mean to be decentralized? Well, it means that there's many copies of it. It's financial in nature. We've ascribed value to the units on there. It's a ledger, right? So that's a database of history of transactions, of movement, that we all have a copy of. These things really just need to be like so understood. And I think that comparing it to the internet is the best analogy we have as far as like from a technical side. But I think it falls apart because it is fundamentally different in the way that it is incentivized by individuals. And I think that eventually people will, like, more and more people will wake up to that. And it's from rug pulls, closed source software failing. It's from exchange failures. It's from all of those kind of things. And it's from, you and I and many others talking about these subjects and talking about self-custody and talking about the incentives. And some of the incentives aren't perfect, right? Like I made a video not long ago talking about why people should run their own node. And the incentives are really for additional privacy and additional sovereignty. So it's sort of a stretch to like push that into like a financial incentive. Privacy could be argued as privacy can like blend over to security really easily. And then security can be a financial incentive so that you don't lose your Bitcoin. But it's not as obvious. Like so many questions in my node videos, do you get paid for running a node? No, you don't. You don't get any Bitcoin for running a node. So it's like the incentives aren't fully aligned there. And that's a challenge. And that's why there's way more Bitcoin holders, because there's a financial incentive to hold Bitcoin, and way less node runners because there's not a clear financial incentive to run nodes. So maybe, I don't know what the answer is to that, but I do see Bitcoin as being comparable to the internet, but fundamentally different because of the incentives that underlie it.
Yeah, and people also are more drawn to like have a miner running. And like if you run a miner like yourself, you have to run a node also. Like this is kind of like
you don't
kind of
technically have to.
Yeah, but like I don't know if you've not seen a lot of people that don't do it. I don't, like if you really run your own miner. Like I've never done that actually. Like I don't run my own miner, so I don't know about it. But don't you need like isn't it, if you go through the trouble and setting up your miner in your own home, like wouldn't you run your own node also?
Many people don't. I mean, it's better to. There actually is a financial incentive to do that to some degree. So like you can just contribute your hash rate. Like you can set up a miner in about 15 minutes and then just contribute your hash rate to a pool or to a solo pool, and they'll just take a small fee for doing that. You can get a node and then you can run your own datum server and then connect to a pool, and then essentially if you hit a block, you would actually construct your own block template, and you could contribute to a pool or solo even with that setup. So the difference is that you can be a hasher without running your own node if you're a miner, and you're contributing your hash rate to somebody else's node, but you can't be a miner without running your own node if you're mining or if you're hashing. That would be the difference there. But technically you could, and you would still get rewarded in Bitcoin for the amount of hash rate that you would contribute.
Yeah, because I was thinking about the reward, and like with mining, you get a reward, and having a solo miner at home and a node connected, I think it's just like a nice, just a learning experience. Even if you don't get anything real out of it, solo miner, you probably won't get rich. Like you can have a lucky hit, and we had a couple of instances already where a solo miner actually mined just for himself and hit a block. I think we had 2-3 instances of people posting it online and doing that. But otherwise, it's more of a learning experience. But yeah, mining is a fun one. It took me a while. I came into mining a little bit late last year. It's a fun experience having some like natural Bitcoin income that's actually like in the Bitcoin ecosystem.
Yeah, it's like a DCA of potentially non-KYC Bitcoin. And it's really easy to, as a home miner, be able to mine non-KYC Bitcoin. And you might be paying a premium for that based on your residential electricity rates. I just did a calculation of my Bitforge, which is like twice the power of a Bitaxe Gamma. And it cost me about a 4% premium to mine. But it spat out, electrical heat. So it offset a little bit of my electrical costs for heating my room here, and gave me non-KYC Bitcoin at a 4.5% premium. So there is reason to do it. And I do think sort of, unfortunately, a lot of it is sort of like altruistic or fun at this point. But if you did sort of calculate that in, it could make sense to heat your home with Bitcoin mining and generate non-KYC Bitcoin, which could become more and more important to sort of get that newly minted or unconnected from your identity Bitcoin, which could be, there's a lot of work in Bitcoin in that realm, in my opinion, to make it more or less like to make it more fungible. Like there's sort of like people say like one Bitcoin is one Bitcoin, but that's not really true, because Bitcoin, like UTXOs, will have different characteristics, right? So they'll have different privacy scores. There'll be certain value around that based on where you live, where you live. If it's So anyway, there's work to be done there with government policy. There's work to be done with open source software, developing better ways of being able to transact in a peer-to-peer way, which is entirely possible on the Bitcoin network. And a lot of that is clunky and expensive right now and inefficient. So mining could be a potential way of people doing that too, home mining.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC-free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. Let's get into one more topic that I think a lot of people are currently interested in, and I think will be for quite some time interested in, which is strategy, the whole treasury company space, the preferred stocks of those treasury companies, mostly I think strategy. That's where most of the attention is, and I think also where most of the attention should be. What are your thoughts on Bitcoin treasury companies at large and specifically strategy?
Yeah. So I just want to preface this with it's not Bitcoin, right? So we've talked about Bitcoin this whole time, right? Bitcoin and self-custody should be the cornerstone of everybody's portfolio and everybody's wealth, in my opinion, right? That's my opinion. You make up your own mind. Personal finance is personal for a reason. But when I was first getting into Bitcoin, I have a really good friend who's really into the TradFi scene. And I was explaining Bitcoin to him just like with this fervor of fascination that I had in the early days. And he said to me, it was kind of like the left of the bell curve kind of question, right? Or statement, because he had so little understanding of Bitcoin. He said, what happens when companies earn Bitcoin? Like, wouldn't you want to just invest in a company that has Bitcoin and continues to get more Bitcoin? And it was kind of like a light bulb switch for me, because it's like, yeah, I mean, that's like, if Bitcoin's money, the reason you invest in a company is because that company has all these metrics that you can talk about, free cash flow and forward looking earnings and all these kind of things. You value them on a price to earnings ratio based on that free cash flow. And if that cash is Bitcoin, then you're valuing them on the growth prospects of Bitcoin plus what they can acquire into the future. And I think that there's a real mismatch of valuations within the market right now, because that's not how people are looking at the treasury companies. They're not looking at the forward ability to acquire Bitcoin. And there's a lot of work in bringing that education forward, and there's a lot of work in like more and more companies just adopting Bitcoin as part of their treasury portfolio and just putting any earnings they have into Bitcoin, right? Like, this is something that like Block does. You mentioned strategy, but I'm going to mention Block for a second, which is the company that uses that has Cash App and Square. They also have they make Bitcoin miners called Proto. They make the BitKey. They have a lot of Bitcoin related things that they do, and I believe it's like 10% of their Bitcoin related business endeavors goes towards Bitcoin in their own treasury. So they're just actively buying Bitcoin with proceeds from operations. And to me, that's the future. The future is every company is on a Bitcoin standard. They're all buying Bitcoin. And that's the reason you would invest in them, is they're going to acquire more Bitcoin over time. However, we live in a world right now where that is not a reality. And there are a select few companies front running that idea massively. And one of them is called Strategy, and they have 780,000 Bitcoin, and they're acquiring so much more. And they're doing it by issuing equity, not debt. And they are paying dividends and essentially leveling out the volatility of Bitcoin. So they're taking on the volatility of Bitcoin for the potential future long-term returns of Bitcoin, and they're paying you short-term short-term value in the form of dividends, which offsets the volatility. So yeah, their most popular product is STRC, which is, again, preferred equity. It has an obligation attached to it, which is a variable rate monthly paid dividend. And right now it's 11.5%. So you could say if that was fixed, which it isn't, they would be hoping to return over a long enough period Bitcoin growth beyond the yearly return of 11.5. And what's interesting is the 11.5 is not compound annual growth, right? So it's a fixed payment. And again, it's variables. They could lower that down at some point in the future and actually pay those shareholders less. But the growth of Bitcoin is compounding. So they buy Bitcoin. If I've measured it out, if Bitcoin grows at a compound annual growth rate of 6.5% for 20 years, it has outperformed the cost of capital by being 11.5% to the STRC holders that entire time, because it's compound annual growth. So it builds on the last year. The 11.5 does not increase, right, over time. So it's a really interesting kind of strategy they've done. And they basically are selling this instrument that billions of dollars are buying, and they're buying Bitcoin with that on the other side. And they're front running what, in my opinion, what will happen, which is every company will be capitalized on Bitcoin because Bitcoin is money. And so they will have a huge amount of money when it is more recognized as such, and they will be able to do whatever they want. They will be incredibly powerful, which is not how companies typically operate right now. They typically operate in a very lean balance sheet, and they deploy the capital into what they believe is into valuable operations and business endeavors to increase the capital in the future, increase the cash flow that they get. And strategy is essentially saying, we're going to increase our balance sheet, and we're going to allow our balance sheet to do the heavy lifting of growing. We're not going to buy a business. We're not going to merge, have to cut a bunch of staff, figure out how to streamline it, and maybe get some sort of efficiency gain from what it previously was. We're just going to buy Bitcoin. And Bitcoin is going to grow at some compound annual growth rate, which will out appreciate the cost of capital. And yeah, that's essentially the way I look at what strategy is doing.
Do you think Stretch is also interesting for hardcore Bitcoiners, or like strategy and or Stretch is also interesting for Bitcoiners that like self-custody, running their own nodes, maybe mining Bitcoin in their personal portfolio?
I think it's all about your investment time horizon when it comes to, so I do think they're very interesting, but it's really dependent on your time horizon. So the way I look at it is, if you understand Bitcoin, you will trust STRC because you understand that they're buying Bitcoin with it, and the Bitcoin will out appreciate, and they could literally just sell Bitcoin to pay you dividends over time. And it still works mathematically. So you will trust that. I mean, you're taking on counterparty risk of MSTR. But if you understand Bitcoin, you understand why the math of STRC works. So you will trust the math of it. And then really, if you understand the math of Bitcoin, and therefore you understand that and trust STRC, then why would you want to own STRC? Because you're on the opposite side of that trade, right? You're getting 11.5%, but Bitcoin's compounding at 20+%. It's stupid, right? And the reason you would do that is because you have a different time horizon. So you're thinking, okay, I have to buy a car in a year, my car, or I'm going to have a baby, or I'm going to buy a home, and I can't handle the short-term volatility risk of Bitcoin. I know it's going to outperform this instrument like STRC, but I can't risk the principal, right? And that's what these instruments, all these preferreds, have different principal risk to them based on their based on the aspects of the payment, whether it's fixed, variable, and all of this kind of stuff. So it's really about time horizon. Each one of these instruments, STRC is on the shorter end, right? It's closer to, and it's not, but it's closer to a high yield savings account or a money market fund, and that's how they market it. But it is equity, and it is at the board's discretion to pay the dividend, and they could 100% suspend it at any point they wanted to, because it's a dividend from an equity, just as you would buy a utility company, and it's by the board directing whether they release that dividend quarterly or not, and they might change it. So it's, again, the same thing with that. It's not debt, right? So it's not a money market. It's not a T-bill. So it should be understood as such, but people are definitely going to be treating it as that. But it is on the shorter end. But then you start looking at there are other instruments, right? Like STRD, STRK, STRF. These are all less principal protected and fixed dividends. STRK is convertible into MSTR common stock, so it has this sort of equity component in it. And all of these should lie, you should be able to make a model of where they would land in time preference. So if you, and again, all of this is contingent on Bitcoin working, on MSTR working. And so there's additional risk that you're taking on. And none of it, it's very damn far away from self-custody Bitcoin. It's really far away. The only thing that it's connected to Bitcoin with is the fiat value, because these are fiat instruments. And you're taking on custodial risk by investing in something that MSTR has, and you're trusting that their custodial relationship with Fidelity and Coinbase and whoever else is worth trusting. You're trusting the jurisdictional risk of it being a US-based company, and the laws around Bitcoin and the accounting around Bitcoin are all going to be favorable into the future. And there's no confiscation risk. There's so many elements that you're trusting beyond that. But I'm going pretty deep into it. But you could just look at, like, 11.5% interest. Wow, that's awesome. That's better than a money market fund. That's better than a savings account. And 100% it is. It does have different risk profiles that should be understood, in my opinion. But it is sort of leaning towards, and it all makes sense. So, like, I don't have any fear of these things not working in a mathematical way. The only fear, in my opinion, is the third-party trust, which is you're trusting the board not to suspend the dividend. You're trusting, again, the custodial relationship and MSTR. And you're also participating in a market that is much smaller, so it could be manipulated more as well. And you can kind of see that. Like, my theory is, with MSTR underperforming Bitcoin so drastically since Bitcoin peaked and prior, was because there's a lot of shorts being put on MSTR. There's a lot of puts being bought. There's a lot of hedging with something like MSTR, which has an outsized effect on the stock price because its market cap is so much smaller. So it has much less ability to handle that kind of downwards pressure. So there's a lot of reasons to not invest, and there's a lot of reasons to invest, right? There's a lot of reasons to be interested in these products, but ultimately, again, I'll just reiterate that Bitcoin should be the cornerstone of most people's portfolios. Most people just don't realize that yet.
I think that's an extremely important point, and a point I will let sit there for a moment, because it's even if you really love what strategy has and the common shares or the stretch or the preferreds, I have my rule of first not selling the main Bitcoin I have, but like not having less than 80% of my wealth in Bitcoin. Like, people can do whatever they want with their own money, but I just came to the conclusion, I want the majority, like the super majority of my wealth, to be in Bitcoin and to be in self-custody, in my control. And then there is like play money, where you have like, yeah, I can sprinkle in some strategy common shares to like maybe outperform Bitcoin by 2x or 3x over the next 10 years. Let's see what happens. I can have some stretch for some income or something like that. I don't currently, but I could potentially in the future. So this is kind of how I view it. Like, the cornerstone of your portfolio, as you said, should be Bitcoin. That's my main message always. But your money, your decision. I have one question that I ask each and every one of my new guests on the podcast before we go to the end routine. And the question is, what can we learn from you besides Bitcoin?
That's a good question. I don't know anything except Bitcoin. No. Yeah, I think, I don't know. What I talk about on my videos is, it's definitely Bitcoin, but again, a lot of the conversation we had today was really about how Bitcoin changed me And so that reflects into what I talk about as well, right? So I think there's a lot of personal growth that people are looking for. People are looking for, help bettering themselves. And I think I have some information of how to help some people with that. So that could be something, I guess. But yeah, I don't know. I don't really have a great answer for that.
Yeah, it's there are so many different things that pop up, and I think we already talked. Even though it was Bitcoin focused, we also talked about different things in the beginning where you made the jump and all of that. Like there's all. It's actually fascinating. A Bitcoin podcast is one of the few podcasts where you naturally have those side topics in. You know, if you have other podcasts, you kind of have to stay in that lane and experiment like with other topics slowly. But with Bitcoin, it's from day one. Like my podcast, even the first 3-4 podcasts, had a lot of side quests and a lot of life questions and diet things and training and workout things in them that were completely separate from like Bitcoin. Like, why do you talk about those things? And so it's kind of fun to have a Bitcoin podcast because all those side topics naturally come into the conversation, especially if you have it as often as I do. But that's just a note. We have an end routine, as you might know, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, if Bitcoin did not exist, where would you place the majority of your wealth right now?
That's such a hard question. Yeah, if Bitcoin didn't exist, wow. I would have to be speculating on tech investments. I would have to pretend that I have some sort of edge on discovering where the value is going to accrue for AI, which I don't, and I don't think anybody does. Do you invest in the infrastructure? Well, that has been a good play, but will it continue to be? I have no idea. Do you invest in the models, but then the models are being competed? So, that's probably where I would be because I'm young and I have the ability to work harder, to provide income and to retire still at some point, even if I had to go to safer investments. But I think that's what you do when you're young is you make high conviction bets. So I have nothing as high conviction as Bitcoin. And I think the only other space that you would have to be involved in if you're trying to get growth from at a young age would be some other technology, right? It's where a lot of the growth accrues, right? A lot of the value accrues. Maybe it would also be like some semblance of gold, but we're never going back to a gold standard. We're never going back to money being or gold being money. So it has no future as far as the monetization properties of it. And it does in the short term. It will continue to have that for a while, but it ultimately fails as money. So it ultimately fails in the store of value function at some point when better money comes around, and that's Bitcoin. So, but without Bitcoin, that would last a lot longer, right? So maybe some gold because of the sovereignty ability of it and the store of value function that it currently has, although I believe misplaced because of Bitcoin. But without it, again, reality looks much different. So those would be my two bets, I think.
Yeah, and this actually ties a little bit into the thing I'm working on currently with my article or book. Let's see where it goes. Because if you think about that question, it is the very core of why we are so passionate about Bitcoin, because you're no longer forced to be a portfolio allocator. You don't have to pretend you like to have a second apartment to park your cash in there or something like there's so many weird things in fiat going on because the money is bad that people are buying art, they're buying old cars, yeah, like Pokemon cards, yeah, Pokemon cards. Like they are storing their wealth in real estate, in cars, collectibles, arts, Pokemon cards, and all of those things where they don't belong. And that's where a lot of the problems come from. Like why if you buy a home in 2026, why is it worth more in 2028 when you already have used it more and the technology is not as a top notch as it was 2 years before when you built it? And
it's an older home too, right? It's going to need more maintenance. Yeah,
there's no reason why the value of a home should go up. Like with a car, you're also not, or like make an extreme example. If you buy a phone, you're not expecting it to go up in value. Like why does a real estate property then go up in value? Why does your rent go up in value? Your apartment did not get better.
It's
probably
speculation.
got worse.
Speculation is the only reason it's going up. Yeah.
And that's the whole, like, I think the very core of that question of like, where would you place it without Bitcoin is like, yeah, I have to like gold, like, oh, maybe real estate, maybe I buy like an apartment, like maybe some gold, maybe some tech stocks. All of those don't have the monetary premium if there's like one perfect money. And so that's kind of my thesis around Bitcoin will suck up all the monetary premium, and AI will drive down the cost of everything that we can copy. So, for example, like homes and technology in general, and like all of those things. So, really fun. But yeah, I'm really looking forward to writing this finally down, so I can look either very smart or very dumb in 20 years.
No, you'll look smart, man. I mean, you're right. Like AI, there's nothing AI can't make more abundant. Like there's no, people really haven't thought about this, but like AI touches into every field now, AI and robotics as well. So like people will say, well, like home construction, you still need laborers. Yeah, you do, but maybe the plans have been looked over by AI. Maybe the plan of when to do this and when to build this and how many people to have on job site and all of this for like big construction things, AI has probably optimized that. So like AI is working itself into very physical, real world, you know, things that human labor used to do. So human
And the
labor
question is
moving away.
Yeah, like even and even there was this banner ad saying like ChatGPT built me that building, and it was an ad for a construction site, like your jobs are safe. I don't know for how long. Like if you've seen the robotics videos where they can jump in the air and make things happen and they're running, and like it's scary how good they are now, and this will only get better from here. Like all the AI and robotics technology is the worst it has ever been right now up and in the future. 1 year it will be so much better, 2 years it will be so much better. And so I think it's a realistic outcome that there will be some company or some specialized interface where you say, hey, I want to build a home. I purchased a piece of land, make me a draft of my dream home. And then you interact with a chat, you interact with some kind of like portal, and it comes up with a plan. And then you're like, okay, build me that thing. It will hire robots, it will hire all those things, it will interact with different people, it has all the things already. And then you can just sit there, drink some orange juice, and look at how your home will get built. I don't think we're that far away from that. Like I think we are both young enough to absolutely see that happening.
100%. Yeah, it's just a matter of time, as you kind of alluded to. It's just a matter of time. But yeah, you'll have an AI agent that can be a foreman and can be a construction manager. And yeah, there might still be human labor in certain parts of it. But again, that's just a matter of time before it becomes too inefficient to have human labor. And you can do it more efficiently and cheaper with robotics and software. So yeah, it's just a matter of time. And
there's probably in Europe 1 or 2 safety engineers that has to be on site at every time.
Right. Yeah, and I think a lot of that is, again, like just like how Bitcoin adoption has been slowed down by intentionally by like these restrictive tax laws and regulation and all of this, that they'll attempt to slow that down too, because they can't, because there needs to be a transition, because 80% of tax receipts are from essentially like wages and labor. So, or I don't know exactly about those numbers, don't quote me on that, but a lot of it is like a lot of an individual's wealth, a lot of it is from wages, not from transfers and not from capital appreciation. So if you get rid of labor, you're going to have a huge, like if it happens overnight, people are going to be rioting, hungry, and all sorts of things. So you need to manage that transition. So it will take time, and they'll try to slow that down, and they'll be terrible at the transition, no doubt, because the government is terrible at everything it does. But yeah, I mean, it's just a matter of time, basically, before it becomes inevitable.
I remember about 10 years ago in school, we had in our German class, we had once a week a debate round where two students had to find one topic they both are interested in, and one side takes one side takes a side, and the other person takes a side, and we had to debate things. And one common theme that got debated was self-driving cars. Will it ever be a thing? How will it be done, and all of those things? And I remember those debates because I was one of them saying like it will be definitely a thing, like they will drive themselves. Like I was always like very optimistic, like very like technology will take over the world. I don't know where it comes from, but I was always in that realm. And it's so funny now because now 10 years later, they drive themselves. It's here. We don't have to speculate on it. Like I was driving in Miami. I was visiting Miami like a year ago already, and I was like, let's try this self-driving car of Tesla. Got to the Tesla dealership, said like, hey, can I have a Tesla to try it out for an hour? They're like, here you go. I was sitting in it, put something on there, clicked two buttons, and like it was just driving. And I was like fascinated. And now even in Europe, like Netherlands just approved full self-driving and for Tesla. I think in Germany, Mercedes-Benz has some license. So it's like 10 years ago, I debated if it ever will be a thing. Now it's already a thing since like, I don't know, 2 years or so. It's great. Things process faster than people think.
Yeah, people are both impatient and you know, like they're sort of like, yeah, it's that saying where like, what is it, like you're always overzealous about what you can do in 1 year, but you underestimate how much you can do in 10 or something like that. Yeah. And yeah, I mean, the self-driving, that's human labor eliminated, right? No taxis, like Waymo is reducing the amount of demand on human drivers. And it's just going to, again, as you said, this is the worst it's ever going to be. It's only going to be better from here. It's only going to be more and more from here. So yeah, it's inevitable. We're living in the future. We're living in a sci-fi novel, and we're seeing it happen.
And I think we will be like 10 years ago, we debated if self-driving cars will ever be a thing. Now we have self-driving cars and we're slowly getting them integrated. I think in 10 years, we'll be discussing if we should ban human drivers. Like this will be an actual discussion because we'll have the data on how much more safe a self-driving car is versus how horribly a human driver on average is with driving a car.
Yeah, you're probably right. And then, you know, the question of sovereignty as an individual will be important to think about, right? Yeah, there's a whole nother rabbit hole we could go down, but like the fact that these cars can shut themselves off, or they can go back to, you know, whatever, go back to the dealership, you know, like that could not be good as well, right? That's a lot of control. So, but a whole nother rabbit hole.
I'll say one more sentence just to like clear it up. It's when Tesla has now this feature where they can let the cars be delivered by themselves because it's full self-driving. And so do you really own a car if it drove itself to you, because it can also drive itself again away from you? Like, do you really own that car the same way as like, do you really own a home if you have to pay taxes on it? It was just like an interesting thought I had, but yeah, it will be a fascinating conversation what future of transportation looks like if we have fully self-driving cars, trucks, trains, all of that, and you have a cheap subscription model every month that you just pay, and you can basically have the same level of transportation than the US president has right now. Like maybe not the same, but like from a convenience standpoint, from a speed perspective, from a safety perspective, it will be just so good. Because the car is just so much safer, quicker. You have it here. You have basically your personal driver in your pocket for like, I don't know, $20 a month for like 10 Satoshis a month.
Yeah. It's going to be a fun future, man. I'm looking forward to it.
I'm happy
Let's
to see that. Let's be positive on where the world is going. Thank you so much, Forrest, for being on the podcast. It was a lot of fun. I feel like we could talk another 2 hours on the multiple topics that came up in this conversation. Before I let you go, where can people find what you are doing and ask you questions?
Sure. Yeah, you can. The best place to find me, at least to start, is to just go to my YouTube channel. It's Forrest Hodl, HODL. I'm sure Robin will throw it in the description there. You can start there. I'm on Twitter. I'm on Maple Bitcoin. I'm on the BTC Mastermind every week. I have a couple of different school communities I'm a part of. There's some exclusive content, courses, and stuff if you're just kind of new to Bitcoin that I've produced. But start at the YouTube channel. And again, yeah, thanks, Robin, for having me on. This was a lot of fun. And definitely, I mean, I got a little time restraint here, but I would love to go way further into into those last couple of subjects. 100% would have been fun, but you got to cut it off somewhere.
Exactly. That's always the hard. Like I had questions from people actually coming up to me like, "Oh, is it hard to keep a conversation going for like 1 hour, 2 hours?" And I'm like, it's hard to cut off. Like if there's a guest that is interesting enough to talk to for like 40 minutes, it's really hard to cut it off because then it just only gets better. You have more reference points to you just get into the conversation. The first 30 minutes are usually worse than the last 30 minutes. So you if you watch a podcast, you should start from behind, I guess.
Good point.
But it's hard to do that. But yeah, thank you so much, Forrest, for being on the podcast. Thank you so much for everyone also that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.